Well, hello everybody. As you can tell, fighting a bit of a scratchy throat. This is actually day five. The previous 4 days, no voice whatsoever, but I did want to share my market insights since I did the research. So if you can just kind of bear with me, I'll go slow and deliberate. We'll get through this together. I'm sort of relieved to be able to do it, to be honest with you. Was not sure if I'd be able to answer the bell. So it is the 31st of March. Hard to believe, isn't it? First quarter of the year done. Quick reminder that everything that we do here is for educational purposes only, should not be considered as investment advice, right? We don't do that part. You're your own advisor. So, what's moving the markets? Well, stocks have been selling off this morning in advance of the tariffs being rolled out on April 2nd. I think the markets were kind of hoping to hear that maybe there'd be something less than 25% or that there were deals in the work to delay the implementation. Bottom line is that tariffs are going to make everything more expensive on which tariffs are assessed. You know, if an imported, let's say you're a car dealer and you have to now pay 25% more for your vehicle, guess what you're going to do? You're going to have to raise your prices 25% because a car dealer might make, $500 to $1,000 on a new car. That's it. They can't afford to eat it. So the consumer is going to have to eat it. People are scared to death about this, and I don't blame them. The fear in the markets, the fear in the economy, the fear as I just talked to people is palpable. Folks are scared. Are we going to have a recession? The fact of the matter is, I don't think that's going to happen. I also think the market is going to close higher than where it started this year. But I told you, and I have been telling you right along, we got some bumps in between now and then. Nvidia and Tesla both opened 5% down on the day. Two stocks that have been kind of taking it on the chin recently. 10-year Treasury pretty steady at 4.222. Oil prices, they've been moving up a little bit. And right now they're sitting at about $71 a barrel. Want a safe place in the market to hang out? Safe is a relative term. Oil stocks, relatively low PEs, solid dividends, mid threes, good candidate for covered calls. So something to consider. What to watch this week? We had our first piece of hard data. So, excuse me. I knew this was going to be tricky, but if you'll bear with me, I'll keep grinding it out. Um, so there's hard data, that's real economic data. And then there's soft data, that's sentiment, all that good stuff. Hard data has been pretty darn good. Today, the Chicago Business Barometer, PMI, that's Purchasing Managers Index, supposed to come in at 43.6, came in at 47.6. So that's a big win. Tomorrow, we got the jobs opening number. So that'll be interesting. Um, Wednesday, new jobs. That'll be a big deal. The ADP employment report, kind of a litmus test for the economy. Um, Thursday, initial jobless claims. Is there anything else? Yeah, Friday. Friday's a big day. U.S. employment report, the unemployment rate supposed to hold at 4.1. I suspect that's probably right in there. And hourly wages year over year expected to go 3.9%. So that's hard data, also known as the data that very candidly matters. Last week's heat map. So you can see not everything was down. Clearly, more red than green. So the market struggling. Nvidia, the big loser, down at 13%. Google's going to be competing with AI. They've got a head start, you know. I mean, I still exclusively go to Google when I'm looking for something, but a lot of people have told me they've switched off of Google. So that'll be interesting. And the 1 year heat map, far more green than red, but the green is not bright green like it used to be. I remember when Nvidia year over year was up 200%. Now it's 16%. So some massive changes have happened here in the last, since about mid-December. Market sentiment, ironically, because it doesn't include today, picked up. So bullishness went from 21.6 to 27.4, still well below the average of 37.5. Bearishness, still way ahead of average, 52.2. So, like I said, the fear out there, palpable. How much the Fed's going to cut rates? This is new. Check this out. Now we are expecting our first rate cut in June, and then another one in July, another one in October. If we get 3 rate cuts and there's not a big fear of recession, that will be the catalyst for the second half of the year for the market. Survive the first half, profit in the second half. That's kind of the way that I'm approaching it. Sector returns. Now, this will surprise you. So the market right now, year to date, S&P is down about 6%. So a lot of people feel like all stocks are doing poorly, but that's not true. The reality is that 7 of the 11 sectors are up. They're in the green. So energy, which I've been telling you about for months, healthcare, consumer staples, utilities, REITs, financials, which I love, materials, they're all up on the year. The only big losers, communication down 8%, tech down 14, consumer discretionary down 15. We're worried about whether people at the top of the food chain are going to continue to spend money. All right, let's look at the charts. I think I've survived this recording. You have no idea the effort it takes when you feel like this to do this, even though it doesn't take very long. But I didn't want to miss it. I've got too many people telling me that they really look forward to it every week, and I can survive a cold. So the chart on the S&P 500 is a mess. We're down here. Yep, that was the level that we tested today. So far, it's held. So 5,500 is kind of that magical level. If we fall below that, you might start seeing some panic selling. But right now, we're at 5,538. So we're hanging in there. So we'll kind of keep an eye on that. All right. Listen, thanks for bearing with me here. Um, Appreciate that. Hope it wasn't too hard to listen to. Did my best. And yeah, I don't think it was too painful. Was it? Some days are better than others. So outside of my voice, I feel great. So I hope you have a blessed day, and I'll see you next week. Bye for now.